Before we begin, please note that I am not a licensed financial advisor or insurance professional. This presentation is intended for informational and educational purposes only. The information provided is not a substitute for professional advice. Insurance rates, policies, and company practices can change, so you should always conduct your own thorough research and consult with a qualified professional to determine what is best for your individual situation. You get the envelope in the mail. You know what it is. It's your car insurance renewal. You take a breath, you tear it open, and there it is. Your rate went up. Again, you start running through the checklist in your head. Any accidents? Nope. Any tickets? Not in years. Are you driving less? Definitely. So why on earth are you paying more? Feels like a scam. Feels fundamentally unfair. And in many ways it is. For 100 years, the auto insurance industry has been running on a model that punishes you for things that have almost nothing to do with how you actually drive. They look at your age, your gender, your credit score, your marital status, what zip code you live in. They're using statistical proxies to guess how risky you are. And worse? A huge chunk of the premium you pay as a safe, responsible driver goes directly towards subsidizing the claims of the guy who weaves through traffic while texting, the person who slams on their brakes every 10 seconds, and the one who treats every yellow light as a personal challenge. You are paying for their bad habits. But what if you didn't have to? What if there was a way to completely flip the script? An insurance model that promised to judge you on one thing, and one thing only: how good of a driver you actually are. Not your credit score. Not your zip code. Just your actions behind the wheel. This isn't science fiction. This is the entire premise behind a new wave of insurance companies, and one of the biggest and most disruptive players in this game is Root Insurance. They claim they can save good drivers up to 52% on their car insurance by using the supercomputer you carry around in your pocket every single day. Your smartphone. But how does it really work? Is it safe? And is letting an app track your every move actually worth the potential savings? In this deep dive, we are going to pull back the curtain on Root Insurance. We're going to break down exactly how their telematics technology works, how they use your phone sensors to build a profile of you as a driver. We'll cover the good, the bad, and the downright controversial aspects of their business model. We'll look at who this insurance is perfect for, and who should absolutely stay away. By the end of this video, you will have a crystal clear understanding of drive-based insurance, and you'll be able to decide once and for all if Root is the key to finally stop overpaying for car insurance, or if it's a privacy nightmare you want no part of. The promise is simple: drive good, pay less. But the reality is far more complex. So let's start with the most important question. How does Root actually know if you're a good driver? It all starts with something called the test drive. This test drive isn't like anything you've done before. It's not a 10-minute loop around the DMV with a nervous instructor. This is a 2 to 4 week audition for your insurance rate, and the judge isn't a person. It's an algorithm, a silent, invisible arbiter of your driving skill that lives inside the one device you carry everywhere: your smartphone. For the entire duration of this test, every time you get in a car, Root is watching. Or more accurately, it's feeling. It uses the suite of sophisticated sensors built right into your phone to paint a shockingly detailed picture of you as a driver. Think about what your phone can do. It knows where you are, how fast you're moving, which way you're facing, and how you're holding it. This is the holy trinity of data for a telematics-based insurer. It primarily boils down to 3 key sensors: the GPS, the accelerometer, and the gyroscope. Let's start with the GPS. This is the most obvious one. It tracks your location, and from that, Root can deduce a ton of information. It knows your speed, of course. Are you consistently going 80 in a 65? It knows. But it's smarter than that. It also knows the type of road you're on. Driving 70 miles per hour on a wide-open interstate is statistically much safer than driving 45 miles per hour on a winding 2-lane country road at night. The GPS also tracks the time of day you drive. Getting on the road at 2 a.m. on a Saturday is, in the cold, hard world of actuarial tables, exponentially riskier than driving at 2 p.m. on a Tuesday. There are more drunk drivers, more tired drivers, and lower visibility. So the GPS isn't just asking how fast, it's asking where and when, and building a risk profile based on your answers. Next up is the accelerometer. Every modern phone has one. It's the sensor that knows when you turn your phone sideways to watch a video. But its primary job is to measure changes in velocity, acceleration. For Root, this is the heartbreaking detector. Imagine you're holding a full cup of coffee. If you accelerate smoothly from a stoplight, the coffee barely sloshes. If you stomp on the gas, it flies everywhere. The accelerometer in your phone feels that lurch. The same goes for braking. A gradual, controlled stop is one thing. Slamming on the brakes at the last second? The accelerometer registers that violent change in momentum as a high-risk event. Why? Because frequent hard braking doesn't usually mean you're avoiding accidents. It means you're following too closely, not paying attention, and constantly putting yourself in situations where an accident is more likely to happen. But the real secret weapon, the sensor that separates root from older plug-in devices, is the gyroscope. The gyroscope measures orientation and rotation. It works in tandem with the accelerometer to understand your phone's movement in three-dimensional space with incredible precision. This is how it judges the quality of your driving. Are your turns smooth and controlled, or are they sharp, jerky, and aggressive? The gyroscope can tell the difference between a gentle curve on a highway on-ramp and a sudden high G-force lane change to cut someone off. It's feeling the physics of your car through your phone. But the gyroscope's most critical job is detecting the single biggest factor in Root's scoring system: distracted driving. This is their number one thing. Root is obsessed with whether or not you are using your phone while driving. The gyroscope knows how you're holding the phone. It can tell if the phone is sitting stationary in a cup holder or a mount, versus if it's being picked up, tilted, and tapped on. The algorithm is smart enough to recognize the micro-movements associated with texting or scrolling. When you combine that motion data with the fact that the GPS knows the vehicle is moving at 50 miles per hour, it paints a very clear and very damning picture. Root claims that this focus on distracted driving is their key differentiator, allowing them to identify and reward the safest drivers, not just the ones who drive slowly. So, during this 2 to 4 week test drive, Root is constantly collecting data from these sensors and feeding it into its algorithm, which then grades you on 4 main pillars. Pillar 1, as we just discussed, is focus driving. Don't touch your phone. Period. This is the cardinal sin. Answering a call on Bluetooth is fine. Using your phone for GPS while it's in a mount is generally okay. But picking it up, texting, changing your music, scrolling through social media, this is what the app is designed to bust you for, and it is weighted more heavily than almost anything else. Pillar 2 is smooth braking. This comes directly from the accelerometer. Root wants to see you anticipating traffic, keeping a safe following distance, and coasting to a stop. A driving report full of red flags for hard braking tells them you're an aggressive or inattentive driver. Pillar 3 is gentle turning. This is the gyroscope's domain. They want to see controlled, deliberate turns. No whipping around corners, no aggressive lane changes. They want to ensure a chauffeur, not a getaway driver. And Pillar 4 is safe hours. This is all GPS and time-of-day data. The algorithm heavily penalizes driving during high-risk hours, which for most insurers is roughly between 11 p.m. and 4 a.m. Driving consistently during these times, even if you drive perfectly, can negatively impact your score because you are, statistically, sharing the road with more danger. Now here's the catch. While we know these are the 4 main pillars, Root's algorithm is a black box. The exact weighting is a proprietary secret. How much does one hard brake offset an entire week of focused driving? How many late-night trips does it take to label you a high-risk driver? No one outside of Root knows for sure. It's not a simple point system where you can calculate your own score. You are feeding your data into a machine learning system, and it spits out a verdict without showing its work. This leads to one of the biggest questions people have. How does Root know if I'm the one driving? What if I'm a passenger in a friend's car who drives like a maniac? What if I'm on a city bus that's constantly starting and stopping? Or in an Uber? This is a huge point of confusion and frustration for many users. Root's official answer is that the algorithm is smart enough to figure it out, most of the time. Over the course of several weeks, it learns your patterns. It analyzes the data from trip to trip and looks for consistency. Does this trip start from your house every morning and end at your office? Is the driving style, the braking, the turning, the acceleration consistent with your other solo trips? It compares the data signatures of your driving to that of, say, a bus, which has a very different pattern of movement, or a train, or even when you're just walking. For the most part, it's pretty good at filtering out non-driving trips. But it's not perfect. Being a passenger in a car is the hardest for it to distinguish. The app does allow you to go in after a trip and categorize it, telling it, I was a passenger. But many users don't realize this, or they forget. And anecdotally, some people report that even when they do, a particularly bad trip as a passenger can still seem to negatively affect their final score. It's one of the fundamental ambiguities of a system that relies solely on a phone. So for 2 to 4 weeks, your phone is your judge, jury, and potential executioner. At least for your insurance rates. It's logging every mile, every turn, every stop. But what happens when the verdict comes in? What does it take to actually pass this digital driving exam? And what are the secret pitfalls that can get you an instant rejection, even if you think you're a perfect driver? That's where the real story begins. So you download the app. You give it all the permissions it asks for, and believe me, it asks for everything. Location, motion, fitness tracking. It wants to be your new best friend. The one who sits silently in the passenger seat, judging your every move. And then the test begins. For the next 2 to 4 weeks, your phone transforms into a silent digital driving instructor. Every trip to the grocery store, every commute to work, every late night run for takeout, it's all being logged, analyzed, and scored. There's no feedback in the moment. No little buzz to tell you, hey, you took that corner a little too fast. There's just the silent accumulation of data. It's a strange feeling, knowing that every tap of the brake and every press of the accelerator is feeding into an algorithm that holds your financial fate in its hands. But this isn't random. Root is looking for very specific things. Think of it like a final exam with 4 main subjects, and you have to ace all of them. These are the 4 core pillars that make or break your Root score. Get these right and you're on the fast track to a massive discount. Get them wrong and you'll get a polite email telling you, thanks but no thanks. The first and most obvious is hard braking. Now this sounds simple. Don't slam on your brakes. But it's so much more nuanced than that. The app's accelerometer is incredibly sensitive. It's not just looking for panic stops where you lock up the tires to avoid hitting a deer. It's measuring the g-force of your deceleration. A hard brake to Root could be what you consider a normal everyday stop. Imagine you're approaching a light that turns yellow. You have a choice. You can either speed up and fly through it, which is its own problem, or you can brake firmly to stop in time. To the algorithm, that firm brake looks like a lack of anticipation. It looks like you weren't paying attention to the flow of traffic, that you didn't see the stale green light and predict it was about to change. A good driver, in Root's eyes, sees that yellow light from a distance and begins coasting, applying the brakes gently and smoothly to come to a perfect soft stop. Every hard brake is a black mark. Tells the algorithm you're a reactive driver, not a proactive one. You're reacting to a crisis, not anticipating and avoiding it. And in the insurance world, reactive drivers are the ones who cause accidents. The second pillar is the mirror image of the first. Smooth acceleration. This one is the silent killer of many great driving scores. You might be the smoothest braker in the world, but if you have a lead foot, you're done for. Again, the app is measuring g-force. When the light turns green, are you the person who floors it trying to get ahead of the pack? That surge of acceleration, even if it's only up to the speed limit, sends a massive red flag to the algorithm. Signals aggression. It signals impatience. It signals the kind of driver who weaves through traffic and tailgates. Root wants to see a gentle, gradual increase in speed. A calm, controlled departure from a standstill. They want the driver who is in no rush, the one who is a picture of zen-like calm behind the wheel. Think of it this way. The algorithm wants to believe you're driving with a full, uncovered pot of boiling soup in the passenger seat at all times. Any sudden movement, forward or backward, is a failure. Now for the third pillar. And honestly, this is the one that disqualifies more people than anything else. It's the one most people don't even realize is being measured so critically. It's called focus driving, which is a nice way of saying, are you touching your phone? This is the big one. Root's entire business model is predicated on the idea that distracted driving is the #1 cause of accidents, and they are ruthless in how they measure it. They use your phone's internal gyroscope and accelerometer to detect any handling of the device while the car is in motion. This isn't just about making or receiving a phone call. Did you pick up your phone to change the song on Spotify? That's a fail. Did you tap your screen to check the navigation? Fail. Did your phone slide off the passenger seat and you reached over to pick it up? Huge fail. The algorithm detects the specific minute movements of the phone being held in a hand versus sitting in a cup holder or a mount. It knows. Even if you use a hands-free mount and just tap the screen, it can often register that as an interaction. The only way to be 100% safe during your test drive is to put your phone in a mount or in the glove box. Start your music and navigation before you start driving. And do not touch it again until you have parked and turned the car off. This is non-negotiable. For 2 to 4 weeks, your phone is a hot potato the second your car is in drive. And that brings us to the fourth and final pillar, the one that can feel the most unfair, safe hours. This has nothing to do with your skill as a driver. You could be the smoothest, most focused driver on the planet, but if you do it at the wrong time of day, Root will penalize you or even reject you outright. The algorithm heavily, and I mean heavily, favors driving during daylight hours on weekdays. Why? Because statistically, that's when the roads are safest. The most dangerous time to be on the road is late at night, specifically between midnight and 4 a.m., especially on weekends. That's when there are more tired drivers, more impaired drivers, and lower visibility. So, if you're a bartender, a nurse working the night shift, a baker who has to be at work at 3 a.m., or even just a night owl, you are at a massive disadvantage. Root's algorithm will see your driving patterns and classify you as a high-risk driver, regardless of how perfectly you brake, accelerate, or ignore your phone. It's a cold, hard statistical reality. If your lifestyle requires you to be on the road when the moon is high, Root is probably not the insurance company for you. Those are the 4 main commandments. But there are other, more subtle things being measured. What about speed? Root is famously cagey about this. They claim they don't penalize you for going a few miles over the speed limit. But what they are tracking is your speed relative to the data they have for that road. More importantly, they're tracking the consistency of your speed. Smooth, consistent speed is good. Rapid acceleration followed by hard braking, the classic sign of someone speeding between traffic lights, is very, very bad. They also track how you take turns. Your phone's gyroscope can tell if you're taking a corner too fast, causing the phone and the car to tilt excessively. So slow down before you enter a turn, not while you're in it. After a few weeks of this intense scrutiny, the day of judgment arrives. One of 3 things will happen. Best case scenario, you open the app and there it is. A quote, a concrete number telling you what you'll pay for the next 6 months. The second and most common outcome for those who don't make the cut is a simple rejection. The app will politely inform you that based on your test drive, they are unable to offer you coverage at this time. It's a clean break. But there's a third maddening possibility, limbo. You might get a message that says they need more data, and that your test drive has been extended. This can be frustrating, leaving you to wonder what you did wrong and forcing you to continue this high-stakes performance for another week or 2. So you've done it. You've driven like a saint for a month. You've mastered the art of the featherlight brake pedal. You accelerate like you're in a funeral procession, and you haven't touched your phone since you started. You open the app, your heart pounding, and you see that beautiful, beautiful quote. This is the moment of truth. This is where all that effort pays off in the form of massive savings, right? But what if the number you see isn't the incredible discount you were promised? What if, after all that, the quote is average? Or worse, what if it's actually higher than what you're paying right now? Is this whole test drive just an elaborate bait and switch? Now we get to the money. How does Root's pricing actually stack up? And what are the hidden factors in their quotes that can turn a perfect driving score into a disappointing deal? So let's pull back the curtain on Root's black box algorithm. The single biggest misconception about Root is that your driving score is the only thing that matters. People finish the test drive, they see that perfect 10 out of 10, and they expect a quote that's 50% lower than everyone else guaranteed. But that's not how it works. Think of your driving score as your ticket to the party. A great score gets you through the door. But once you're inside, Root looks at you just like every other insurance company on the planet. Your driving score is the main ingredient. Yes, but it's mixed with a whole cocktail of traditional insurance factors. And this is where that feeling of a bait and switch comes from for so many people. You do all this work, you drive like a saint for a month, you prove you're a safe driver, only to find out that your final price is still heavily influenced by the same old things you were trying to escape. So what are these hidden factors? The first, and arguably the most controversial, is your credit-based insurance score. Now, this is not the same as your FICO score that a bank uses for a mortgage, but it's closely related. Insurance companies, including Root, have mountains of data that show a statistical correlation between how people manage their finances and how likely they are to file claims. The logic from their perspective is that someone who is financially responsible, pays bills on time, manages debt well, is also more likely to be responsible in other areas of their life, like maintaining their car and, yes, driving safely. Is it fair? That's a massive debate. Many people argue that a past medical bill or a tough financial year shouldn't have any bearing on their car insurance rates. And in some states like California, Hawaii, and Massachusetts, it's actually illegal for insurers to use credit scores to set prices. But in most of the country, it is a standard, powerful, and often invisible factor in your quote. So if you have a 10 out of 10 driving score but a less than perfect credit history, you might be shocked to see a quote that's much higher than you expected. Root might weigh your driving more than Progressive or Geico, But that credit factor is still in the mix, and it can absolutely sabotage a great driving score. Next up are the usual suspects: your age, your location, and your driving history. A 22-year-old driver is statistically far more likely to get into an accident than a 45-year-old. It doesn't matter if that 22-year-old gets a perfect 10 out of 10 on the test drive. They simply have less experience behind the wheel, and the insurance company sees them as a higher risk. Their base rate will be fundamentally higher. And location? It's huge. If you live in a dense urban area like Atlanta with tons of traffic, higher rates of car theft, and more accidents per capita, your premium will be significantly higher than if you live in a quiet, rural town in Wyoming. Root knows exactly where you park your car every night because you gave their app location access 24/7. They know the risks associated with your specific zip code, right down to the street level. So a perfect driver in a high-risk zip code can easily end up paying more than an average driver in a super safe one. And of course, there's your official driving record. The Root test drive only looks at your habits over a few weeks. It can't see the speeding ticket you got last year or the at-fault accident from 2 years ago. But you better believe that before they give you a final bindable quote, they are pulling your official motor vehicle report. If that report has blemishes on it, those will be factored in, and your rate will go up regardless of how well you drove during the test period. Then there's the car you drive. This is another massive piece of the puzzle. Are you driving a 10-year-old Honda Civic known for its reliability and low repair costs? Or are you driving a brand new BMW M3 with a twin-turbo engine? Insurers look at a few key things here. How much would it cost to repair or replace this car if you crash it? How likely is it to be stolen? What kind of safety features does it have? A car with advanced driver assistance systems like automatic emergency braking might earn you a discount, while a popular target for catalytic converter theft might see a surcharge. Your perfect driving score can't change the fact that a Ford F-150 costs more to repair after a fender bender than a Toyota Corolla. And finally, they look at those classic demographic details like marital status and homeownership. Again, this is all a game of statistics. The data shows that married individuals and homeowners tend to file fewer and less expensive claims, so they get better rates. It feels archaic, but it's a foundational part of insurance pricing that even a tech-forward company like Root hasn't abandoned. So let's put this all together and see how it plays out in the real world. Imagine two different people. First, we have ideal driver Sarah. She's 29, single, lives in a mid-sized suburb of Columbus, Ohio. She has an excellent credit score, a clean driving record, and she leases a 2022 Subaru Outback. She does the Root test drive and scores a 9 out of 10. For someone like Sarah, Root could be a home run. Her age is good, her location is low risk, her car is safe, and her financial and driving histories are clean. The high driving score is the cherry on top of an already perfect cake. She could realistically see a quote that's 30 or 40% lower than what she's paying with a traditional carrier. She is the exact customer Root's business model is built to attract and retain. But now let's look at frustrated driver Mike. Mike is 45, married with 2 kids, and lives just outside of Houston, Texas. He owns his home. He drives a 2018 Ford Explorer. On paper, he sounds like a great candidate, but a few years ago, his business struggled and his credit took a major hit. It's recovering, but it's not great. He also had a minor fender bender 2.5 years ago. He's been driving perfectly ever since and nails the Root test drive with a 10 out of 10. He's excited. He's expecting a huge discount. But when his quote comes in, it's only $15 less per month than what he's paying State Farm. Why? Because while his recent driving habits are perfect, Root's algorithm is still weighing that mediocre credit score and that prior accident on his record. His location in a major metro area like Houston also carries a higher base rate than Sarah's quiet Ohio suburb. For Mike, the test drive feels like a waste of time. He proved he's a safe driver now, but the algorithm is still punishing him for the past. This is the experience you read about in so many of the one-star reviews. The crucial takeaway is that Root isn't replacing the old system. It's adding a new layer on top of it. They claim your driving score is the #1 factor. But how much it's weighted is the multi-million-dollar secret. For some people, it might be 51% of the formula. For others, it might feel more like 20%. And there's one more thing. Root is incredibly selective. They aren't just trying to give good drivers a discount. They are actively trying to get rid of bad drivers. If your test drive reveals you're a heartbreaker, a chronic speeder, or you're constantly on your phone, they won't just give you a high quote. They will flat out refuse to insure you at all. They'll send you a notification saying that based on your test drive, you don't qualify for a quote. This is fundamental to their strategy. Skim the cream of the crop off the top and leave the riskier drivers for other companies to deal with. So the quote you get isn't just a reflection of your driving. It's a reflection of your entire life, filtered through the cold, hard lens of statistical risk. Okay, so let's say you're like Sarah. You fit the perfect profile, you ace the test drive, and Root presents you with a fantastic quote that will save you hundreds of dollars a year. You're ready to switch. But a cheap price is only one half of the insurance equation. What happens when you actually need them? What is the claims process like, and can you even get a human on the phone when things go wrong? The true test of any insurance company isn't how they take your money, but how they handle your crisis. And this is where the rubber meets the road, or in some unfortunate cases where the bumper meets the guardrail. It's the moment of truth for any insurance company. You can have the slickest app, the lowest premium, the most brilliant marketing on the planet, but if they vanish when you're standing on the side of the highway looking at a crumpled fender, none of it matters. So let's walk through the Root claims experience, because this is, without a doubt, the most polarizing aspect of the company. It's where you'll find the most glowing 5-star reviews and the most infuriating 1-star horror stories. The experience seems to be one of two extremes, either brilliantly simple or a complete soul-crushing nightmare. Let's start with the promise. The accident happens. You're shaken up, but you're safe. You pull out your phone, open the Root app, and the entire claims process is right there. You tap File a Claim. It guides you through the steps. Take photos of the damage, your license plate, the other driver's information, the police report number. You describe what happened. You hit Submit. In theory, it's a seamless, digital-first experience designed for the 21st century. No waiting on hold, no faxing documents. For many people, this initial step is exactly as advertised. It's quick, it's intuitive, and it provides a small sense of control in a chaotic situation. This is where the positive reviews often come from. Users will say, "I filed my claim in 10 minutes from the crash site, and an adjuster contacted me the next day. The whole thing was settled in a week." When it works beautifully. But for a significant number of customers, that's where the beautiful, seamless experience ends. After you hit Submit in the app, you enter what many have described as a communication black hole. And the reason for this often comes down to one critical detail that most customers don't realize until it's too late. Root, especially for more complex claims, doesn't always handle the claim themselves. They outsource it. They use what are called third-party administrators, or TPAs. A very common one you'll see mentioned in user complaints is a company called Sedgwick. Now, using a TPA is not unique to Root. It's a common practice in the insurance industry, especially for newer or smaller companies, as it allows them to scale their claims department without hiring thousands of in-house adjusters. It keeps their overhead low, which helps them offer those low premiums we talked about. But here's the problem for you, the customer. You didn't buy a policy from Sedgwick. You bought a policy from Root. You have a relationship with the app that tracks your every move. But when you need them most, you're suddenly handed off to a massive, faceless corporation you've never heard of. This is the source of endless frustration. The adjuster assigned to your case doesn't actually work for Root. They work for a company that Root pays to handle the claim. This creates a massive disconnect. The Root app might not have any updates for you, because the app isn't directly connected to the TPA's internal system. The Root customer service number, if you can even find it, might not be able to give you a straight answer because they have to try and get information from the TPA just like you do. You are now in a bureaucratic triangle. You try to call your adjuster. Voicemail. You leave a message. No call back. Days turn into a week. You email them. You might get an automated reply or nothing at all. You try calling the main line for the TPA and get put into a phone tree that leads nowhere. Frustrated, you go back to Root, the company you actually pay every month, and they essentially tell you, "We're sorry, your claim is being handled by our partner, you need to talk to them." This is the recurring nightmare you read about in reviews on the Better Business Bureau and Reddit. People whose cars are sitting in a tow yard, racking up daily storage fees, while they can't get a single human being to authorize repairs. People who were in a not-at-fault accident and the TPA is dragging their feet, refusing to accept liability, forcing the victim's own insurance to step in. We've seen countless stories of adjusters who are unresponsive for weeks, only to finally emerge with a lowball offer that doesn't even come close to covering the repair estimate from a reputable body shop. The fight then begins. You have to argue, you have to provide multiple quotes, you have to spend hours of your life chasing down someone who seems incentivized to ignore you. And remember, during this time you might be without a car. Root's rental car coverage is often a point of contention as well. If your policy includes it, there are daily limits, and if the claims process drags on for a month, which is not uncommon, you can easily exhaust your rental coverage, leaving you to pay out of pocket, all while still paying your Root premium for a car you can't even drive. Let's be perfectly clear. This is not everyone's experience. There are plenty of people who have a TPA-handled claim that goes off without a hitch. The adjuster is responsive, the appraisal is fair, the payment is prompt. But the sheer volume and consistency of the complaints suggest a systemic issue. Seems to be a roll of the dice. You might get a great, experienced adjuster who closes your case in 5 days. Or you might get an overworked, undertrained adjuster juggling 200 cases who you won't hear from for 5 weeks. You simply don't know which one you're going to get. This is the fundamental trade-off of the Root model. The technology is used to automate the front end, the quoting, the monitoring, the billing. This is what makes it cheap and efficient. But the back end, the messy, human-centric business of claims, is often outsourced to the lowest bidder. And that's a gamble. You are betting that you will be a safe enough driver to never need them. But if you do, you are betting that you'll be one of the lucky ones who gets a smooth process. Think about the psychology of this. You've let this company track your every turn, your every stop, your every late-night drive home. You've given them an unprecedented amount of personal data in exchange for a good rate. There's an implicit trust built into that exchange. The feeling of betrayal when that trust is broken during your most vulnerable moment is profound. It's why the negative reviews are so visceral. It's not just about money. It's about being abandoned by the company that promised to have your back. Even for simple claims like windshield repair, which Root often boasts can be handled entirely in the app without speaking to anyone, the reviews are mixed. Some find it incredibly easy. Others find that the app glitches, or the approved service centers are inconvenient, or the reimbursement process gets stuck in limbo. So the claims process is a giant question mark, a true your mileage may vary situation. The technology that makes signing up so appealing can become a barrier when you need human intervention. The cost-saving measures that lead to your low premium can lead to an outsourced, disjointed, and deeply frustrating experience when you need to use the product you're paying for. So if the claims process is this volatile, what about the rest of the customer service experience? What happens when it's not a crisis? What if you just have a question about your bill? Or you want to add a new car to your policy? Or you need to understand the nuances of your coverage? Is there anyone there to actually help you? Or are you once again left alone to navigate the app and hope for the best? This is the million-dollar question, isn't it? It's the moment the sleek, minimalist app and the promise of a frictionless future collides with the messy, stressful, and deeply human reality of a car accident. Because when you're standing on the side of the road, heart pounding, adrenaline coursing through your veins, the last thing you want to do is debug a user interface. You want help. You want reassurance. You want a human being. So let's explore that. Let's walk through what happens when the worst happens. Root's promise is, of course, simplicity itself. You get into an accident. You open the app. You tap file a claim. The app, your silent partner, guides you through the process. Take pictures of the damage from these specific angles. Scan the other driver's license and insurance card. Use the GPS on your phone to pinpoint the exact location. Answer a few questions. Tap submit. And just like that, the process is started. A claims expert they promise will be in touch. It sounds clean. Sounds efficient. Sounds like the future. But what if it's not? Let's imagine a scenario. Let's talk about a driver we'll call David. David is the ideal Root customer. He's in his late 20s, tech-savvy, a careful driver living in the suburbs. He works from home most days, so his mileage is low. His driving score is a pristine 10 out of 10. He's been with Root for a year and a half. And he's been saving about $40 a month compared to his old legacy insurer. He loves it. He tells his friends about it. He feels like he's beaten the system. One Tuesday afternoon, David is heading to the grocery store. He's stopped at a red light on a busy street, listening to a podcast. Suddenly, bam, a jolt from behind. It's not a huge impact, but it's enough to make his head snap back. He pulls over, as does the other driver, a teenager who was looking down at their phone for just a second. Everyone is okay, thankfully, but David's rear bumper is crumpled and one of his taillights is smashed. Annoying, but this is what he has insurance for. He takes a deep breath, pulls out his phone and opens the Root app. He feels a little smug. While the other kid is fumbling for a bent insurance card in his glove box, David is already in the 21st century. He starts the claims process. He takes the photos the app requests, but the glare from the sun is making it hard for the camera to focus on the other driver's information. He tries 3 times. The app gives him a generic error message. Frustration starts to build. He decides to type it in manually. He gets to the part where he needs to describe the accident. He types out a clear, concise paragraph. He hits next. The app freezes. He waits. A loading symbol spins endlessly. He closes the app and reopens it. All the information he just entered? Gone. He has to start over. The smug feeling is gone now, replaced by a growing knot of anxiety in his stomach. This time it works. He submits the claim. The app says, "Thanks. A claims representative will contact you within 24 to 48 hours. 48 hours. Standing on the side of the road with a damaged car. 48 hours feels like an eternity. With a traditional insurer, you'd likely have a phone number to call right then and there. You might even be talking to your local agent, a person whose name you know. David has an app. The next day comes and goes. No call. No email. No in-app notification. Just silence. David's car is drivable, but he's worried. He opens the app to check the status. It just says claim received. No details. No timeline. No name or contact information for his supposed claims representative. He starts digging through the app, looking for a way to contact someone. He finds a chat feature. He types in his question. He gets an instant reply from a chatbot. It gives him a link to a generic FAQ page about the claims process, which tells him a representative will contact him in 24 to 48 hours. He's in a loop. Finally, he finds a phone number buried deep in the help section. He calls. He navigates an automated phone tree. After 15 minutes on hold, a human picks up. David, relieved, starts to explain his situation. The person on the other end is polite, but they're just a general customer service rep. They can't access the details of his claim. All they can do is see that it's been assigned. They tell him they'll send a message to the claims department to expedite it. They promise someone will call him back. Another day passes. Nothing. Now David is angry. This is the moment of truth for any insurance company, and his is failing spectacularly. He calls back, waits on hold again, and this time gets a different representative. He has to explain the entire story from the beginning. This person is more helpful. They manage to find the name of his adjuster and give him a direct extension. Progress. He calls the extension. It goes straight to voicemail. He leaves a message. He waits. He calls again a few hours later. Voicemail. This is the fundamental trade-off of the Root model. By stripping out the physical offices, the local agents, and the large call centers, they cut down on overhead. That's how they offer those potentially lower rates. But in doing so, they also strip out the human safety net. When the streamlined, automated process works, it's brilliant. But the moment there's a snag, the moment you need a real person to solve a real problem, you discover just how thin that digital veneer really is. You are no longer a customer, you are a ticket number in a queue. Eventually, a week after the accident, David's adjuster finally calls him back. The adjuster is professional, but they're clearly overworked, handling hundreds of claims. There's no personal connection. David is just another file to be processed. The adjuster approves the repair and sends him a list of approved body shops in the area. David has a mechanic he's trusted for years, but that shop isn't on the list. The adjuster tells him he can use his own mechanic, but the process will be slower, and Root will only pay what they deem a reasonable cost, which might be less than what his trusted mechanic charges. He's subtly but firmly pushed toward their network. He gives in and takes it to one of their approved shops. The communication nightmare continues. The body shop is waiting on an approval from Root for a supplemental part. David sees the status in his app, but has no context. He calls the adjuster. Voicemail. He emails. An auto-reply. He calls the body shop, who tells him they're also having trouble getting a hold of the adjuster. The entire process is a black box, and he's completely powerless, stuck between a busy body shop and an unresponsive insurance company. What should have been a simple, straightforward bumper repair turns into a 3-week ordeal filled with unreturned phone calls, vague app updates, and a profound sense of being utterly alone. The $40 a month he saves suddenly feels like a fool's bargain. And this isn't just for major events like a claim. This experience echoes across the board for less critical, but still important customer service needs. What if you get a bill that looks wrong? You can't call your agent Bob, who you've known for 10 years. You have to engage the chatbot. If the bot can't help, you have to find the phone number, wait on hold, and explain your issue to a stranger who has no history with you. What if you want to discuss adding a teenage driver to your policy and understand the financial implications? You're not having a strategic conversation with a trusted advisor. You're punching numbers into an app and getting a quote, devoid of context or advice. The entire system is designed for maximum efficiency in the 99% of cases where things are simple. Add a car, pay a bill, download an insurance card. It's brilliant for that. But for that critical 1%, the claim, the billing dispute, the complex policy question, the system can become a frustrating, isolating maze. You're trading the relationship and advocacy of a traditional agent for the cold, and sometimes flawed, efficiency of an algorithm. So when you're considering Root, you have to ask yourself, what do you value more? The potential for a lower monthly premium, or the assurance that when you're standing on the side of that road, heart-pounding, there will be a real, accessible human being ready to pick up the phone and guide you through it? Because after you navigate that maze, after you finally get the approvals and your car is in the shop, the next big question arises. The payment. How does Root decide what your car is worth? How do they calculate the cost of repairs? Are they fair? Or is the fight for a fair payout the next battle you have to wage? The payment. How does Root decide what your car is worth? How do they calculate the cost of repairs? Are they fair? Or is the fight for a fair payout the next battle you have to wage? This is the moment of truth for any insurance company. It's where the promises made in commercials meet the cold, hard reality of a spreadsheet. For a tech-first company like Root, which built its reputation on algorithms and app-based efficiency, you'd expect this process to be streamlined. But streamlined for who? For you or for their bottom line? Let's break it down into the two paths your claim can take: repairs or a total loss. First, let's talk repairs. You've had a fender bender. The other driver's fault, your fault, it doesn't matter for this part of the process. Your car is drivable but damaged. With a traditional insurer, you might be told to take it to one of their preferred body shops for an estimate, or they might send a field adjuster to look at it. Root, leaning on its tech-centric model, often streamlines this. They'll likely have you upload photos of the damage directly through the app. An algorithm, possibly with human oversight, analyzes those photos and generates an initial estimate for the cost of repair. On the surface, this is fantastic. It's fast. You could have an estimate in hours, not days. But here's where the first potential conflict arises. A photograph can't see what's bent behind the bumper. It can't tell if a hairline crack has formed in a critical suspension component. Body shops call this hidden damage, and it's incredibly common. Let's imagine a scenario. Your car gets hit in a parking lot, creasing the rear quarter panel. You take photos, upload them to the Root app, and a few hours later you get an estimate for $1,500. The app might even suggest a few network shops that will honor that price. You drop your car off, feeling pretty good about the efficiency. But then the body shop calls. They tell you that once they removed the bumper and the inner paneling, they found the rear body subframe is slightly bent, and a sensor for your blind spot monitoring system is crushed. The real cost of the repair is now $3,000, double the initial estimate. Now the shop has to submit what's called a supplement to Root. This is a request for additional funds to cover the hidden damage. This is a standard industry practice, but how an insurer handles supplements is a major test of their character. Do they approve it quickly, trusting the licensed professionals at the body shop? Or do they drag their feet, demanding more photos, more justification, maybe even sending their own adjuster out, delaying your repair for days or even weeks? Customer reviews suggest experiences with Root are mixed. Some report seamless, quick approvals on supplements. Others describe a frustrating back and forth, feeling like they and their chosen body shop are being treated with suspicion, forced to justify every line item. And this brings us to another critical point: the parts. Your insurance policy likely states they will pay to restore your vehicle to its pre-loss condition. But the definition of that is where the fight happens. Insurance companies, including Root, often default to paying for aftermarket or LKQ parts. LKQ stands for like, kind, and quality, which usually means a used part from a salvage yard. Aftermarket parts are brand new, but they're made by a third-party company, not your car's original manufacturer. Neither of these are OEM, original equipment manufacturer parts, the ones your car was built with at the factory. Insurers argue that these alternative parts are functionally equivalent and cost less, which keeps premiums down for everyone. But many body shops and car owners will tell you that aftermarket parts can have fitment issues, requiring extra labor to install correctly, and that the quality of a used part is always a bit of a gamble. If you have a newer car, you'll almost certainly want OEM parts to maintain its integrity and value. Getting your insurer to pay for them can be a major battle, often requiring you to pay the difference out of pocket, unless you can prove that no suitable alternative part is available. So while Roots app can start the process quickly, the fight over supplements and the type of parts used is a very real, very traditional insurance industry battle that technology hasn't solved. But what if the damage is more severe? What if the body shop calls and says the cost to fix your car is more than it's worth? This is when the insurance company declares your vehicle a total loss. And this is where the real war for value begins. When your car is totaled, the insurance company doesn't pay to fix it. Instead, they write you a check for the car's actual cash value, or ACV. This is the single most misunderstood concept in auto insurance. ACV is not what you paid for the car. It is not what you see a dealer listing a similar car for. And it is definitely not what you still owe on your car loan. Actual cash value is what your specific vehicle was worth in your local market 1 second before the crash occurred. So how does Root calculate this magical number? They don't just pull it out of thin air. They, like almost all insurers, use third-party valuation companies. These companies have massive databases of vehicle sales information from auctions, dealerships, and private sales. They plug in your car's information, year, make, model, trim, mileage, options, and overall condition, and their software scours the database for recent sales of comparable vehicles, or comps, in your geographic area. It then makes adjustments, adding a little value for low mileage, subtracting for prior damage or wear and tear, and spits out a final ACV report. Root's claims adjuster will then call you and present you with their settlement offer based on this report. And very often, that initial offer will feel shockingly low. You'll immediately go on AutoTrader or Facebook Marketplace, and you'll see cars that look just like yours listed for thousands of dollars more. You feel cheated. You feel like the algorithm is lowballing you. And you might be right. But here's the secret. That first offer is almost always a starting point for negotiation. You do not have to accept it. This is where you need to become your own advocate. First, demand a full copy of their valuation report. Don't just accept the number they give you over the phone. Review that report with a fine-tooth comb. Look at the comparable vehicles they used. Are they really comparable? Do they have the same trim level and options as your car? Did they use comps from 100 miles away where car values are lower? Look at how they graded your car's condition. Did they list it as fair when you know it was excellent? These are all points you can contest. Next, you do your own homework. Find your own comps. Go to dealership websites, AutoTrader, Cars.com, and find vehicles for sale that are as close to yours as possible in your local area. Screenshot everything. The more evidence you have that the market value is higher than their offer, the stronger your case. Document everything that adds value to your car. Did you just put on a brand new set of Michelin tires worth $1,000? Show them the receipt. Did you have a premium sound system or a factory towing package? Make sure those are accounted for. You need to build a case for why your car is worth more. If you negotiate and still can't reach an agreement, there's one more powerful tool you have, and it's written into most auto insurance policies. It's called the appraisal clause. This clause allows you to hire your own independent, licensed appraiser. Root will hire their own. Those two appraisers then try to agree on a value. If they can't, they mutually select a third, neutral appraiser to act as an umpire, and the decision of any two of the three becomes binding. This is a more formal and sometimes costly process, but it takes the decision out of the insurance company's hands and puts it into the hands of independent experts. The bottom line is this. Whether it's a repair or a total loss, the payment process is an adversarial one. Root's technology may make the initial steps feel faster and more modern, but when it comes to the dollars and cents, their goal is the same as any 100-year-old insurer: to pay out as little as they are legally obligated to. The algorithm isn't your friend. It's a tool designed for corporate efficiency. Your power lies in being informed, organized, and persistent. You have to be willing to question the data, provide your own, and fight for every dollar. So let's say you fight the good fight. You get a fair payout, the repairs are done, or you have a check in hand for your totaled car. You've survived the claims process. But the story isn't over. In fact, for your relationship with Root, it's just beginning. You were promised a rate based on how you drive. But now you have a claim on your record. What does that accident, even a minor one, do to your pristine driving score? How does it impact your premium at renewal? Does Root's promise of rewarding good drivers shatter the moment you actually need to use the insurance you've been paying for? And could they drop you altogether? These are the million-dollar questions, the ones that separate a good deal from a gilded trap. It's the moment every driver dreads, not just because of the accident itself, but because of the bureaucratic nightmare that often follows. You're shaken, your car is damaged, and now you have to navigate the labyrinth of insurance. With a traditional company, you call a number, wait on hold, and eventually speak to a person. With Root, you open the app. This is the ultimate test of their model. Is their sleek, tech-first approach a blessing in a moment of crisis, or does it become a cold, unresponsive wall when you need a human touch the most? The process, on the surface, is exactly what you'd expect from a company born in the smartphone era. It's designed to be frictionless. You tap file a claim right in the app. It prompts you for photos of the damage, the other vehicle, the license plate, the scene. You type in a description of what happened. You can even use the app to call for a tow truck. Their marketing claims you can file a claim in as little as 3 minutes. And for a simple fender bender with clear fault, many users report that this initial process is incredibly smooth, feels modern, feels efficient. It's a world away from faxing documents and waiting for a call back in 3 to 5 business days. In this initial stage, the technology feels like your ally. A claims representative is assigned, and communication begins, often through the app itself. It all seems so simple, but what happens when it's not simple? What if the other driver is disputing the facts? What if your car has hidden frame damage the initial photos didn't capture? This is where the cracks in the digital facade begin to show. According to a significant number of customer complaints and reviews, the very app that was a beacon of convenience can suddenly feel like a prison. You need to talk to your assigned adjuster, but they're not responding to your in-app messages. You try to find a phone number, and you're funneled through a generic customer service line where the representative can only see the same notes you can and promises to pass a message along. The efficiency of the app model relies on standardized, simple claims. When your situation becomes complex or messy, the lack of a dedicated, easily reachable human agent can be maddening. You're no longer dealing with a person, you're interacting with a system, and that system can be frustratingly opaque. Then there's the repair process. Root, like most insurers, has a network of preferred repair shops. Using one of these shops can streamline the process, as they have a direct billing relationship with Root. However, numerous reports from customers and even from auto body professionals paint a challenging picture. The core issue often boils down to a conflict between cost-cutting and quality repairs. Root's model is built on low premiums, which means they have to be aggressive in managing their costs, and the biggest cost by far is claims payouts. This can manifest in adjusters pushing for the use of aftermarket or even salvaged parts instead of OEM or original equipment manufacturer parts. While this is a common practice in the industry to save money, customers report that Root can be particularly stringent, leading to disputes with body shops who insist that an OEM part is necessary for a safe and proper repair. This can lead to significant delays, with your car sitting at the shop for weeks while the shop and the insurance adjuster go back and forth with you caught in the middle. The smooth 3-minute claim filing process feels like a distant memory when you're on week 4 without your car, because of a dispute over a $50 part. But let's get to the heart of the matter. The real fear. What does that claim, that one mistake, do to your standing with the company that promised to reward your good driving? Let's say you had a perfect 10 out of 10 score. You were the poster child for Root insurance. You had an at-fault accident. The first thing that happens with any insurance company is the application of a surcharge. An at-fault accident is the single biggest indicator of future risk, so your premium is going to go up at your next renewal. That's standard. But with Root, you're facing a potential double whammy. Not only do you get the standard surcharge for the accident itself, but the accident data also feeds directly back into your driving score. That perfect 10 is gone. Maybe it drops to a 7 or a 6 or even lower. Remember, your low premium was a direct result of that high score. So now at renewal, you're hit with 2 distinct negative factors. First, the accident surcharge. Second, the complete evaporation of your good driver discount, because your score no longer qualifies you as an elite, low-risk driver. The result, as reported by countless former Root customers, is a premium increase that is not just substantial, but often astronomical. We're talking about rates doubling, tripling, or even quadrupling. A rate that was once $70 a month might be quoted at $300 a month upon renewal. From Root's perspective, this is the algorithm working perfectly. You were a low risk, so you paid a low price. Now you are a high risk, so you must pay a high price. The logic is cold, brutal, and completely data-driven. But for the customer, it feels like a bait and switch. It feels like a penalty far out of proportion to the mistake. The very system that celebrated your every smooth turn and gentle brake is now punishing your one moment of failure with what feels like financial exile. The promise was that good drivers save. The unspoken fine print seems to be that one mistake can instantly and permanently redefine you as a bad driver in the eyes of the machine. And that leads to the ultimate consequence, the corporate equivalent of being voted off the island, non-renewal. Could Root drop you altogether? The answer is an unequivocal yes. And they do. Insurance companies are in the business of managing risk pools. Root's entire identity is built on creating an exclusive risk pool of only the absolute best drivers. When you have an at-fault accident, their algorithm may recategorize you. You are no longer a statistical anomaly of safety. You are now, in the cold hard data, a more standard or even substandard risk. And Root is not in the business of insuring standard risk drivers. That's what their competitors are for. So when your 6-month policy is up for renewal, you may receive a letter, or more likely, an in-app notification, stating that they will not be offering you a new policy. This isn't a cancellation for non-payment. It's a business decision. They are, in effect, firing you as a customer. For Root, this is a necessary culling of the herd to keep their risk pool pure, and their rates low for the remaining perfect drivers. For you, the driver, it's a disaster. You now have to shop for new insurance with a recent at-fault accident on your record, and you have a non-renewal from your prior carrier, which can be a red flag for other insurers. The company that wooed you with the promise of fairness and modern technology has, after one mistake, shown you the door. This is the fundamental gamble of Root Insurance. You are betting that your driving perfection will last forever. Root is betting that, for a certain percentage of its customers, it won't. And when that bet pays off for them, the consequences for the driver can be severe. The system is designed to reward perfection and ruthlessly punish imperfection. So we've seen how the technology works, how they price you, and the potentially devastating fallout when things go wrong. But this raises a deeper question. Who is Root really for? Is there a perfect driver profile, a specific type of person who can actually win with this model long-term? And perhaps more importantly, what are the hidden costs of this whole arrangement? What are you truly giving up when you let a company install a monitor in your pocket that tracks your every move on the road? What are they really doing with all that data? The short answer? They're doing a lot more than you think. And the long answer? Well, the long answer is buried in a document that almost no one ever reads. The privacy policy. It's that wall of text you scroll past to click, I agree. But inside that digital fine print is the real contract you're signing. It's not just about getting a car insurance quote. It's about entering into a data sharing agreement that could follow you for years. So I did what you don't have time to do. I waded through the legalese, the corporate jargon, and the carefully worded phrases to find out what you're actually agreeing to. When you download the Root app and start your test drive, you are handing over the keys to a treasure trove of your personal information. We're not just talking about the obvious stuff like your speed or how hard you brake. The app taps directly into your phone's sensors. The GPS, of course, tracks your location with pinpoint accuracy. It knows the routes you take to work, where you buy groceries, which friend's house you visit late at night, and what school you drop your kids off at. But it gets deeper. It uses the accelerometer and gyroscope in your phone to build an incredibly detailed picture of your car's movement. Every turn, every lane change, every slight acceleration. It even monitors your phone itself. The app can often detect if you're holding your phone, tapping the screen, or taking a call while the car is in motion. Think about that. It's not just judging your driving, it's judging your focus, your attention, your potential for distraction, a level of monitoring that no passenger, not even a state trooper, could ever achieve. Now, Root will tell you this data is used for one thing, to calculate your driving score and give you a fair price. And for their direct purposes, that's true. But that is the front door. The question is, where are all the back doors? The privacy policy makes it clear that your data doesn't just stay with Root. It gets shared. The term they use is third parties. It's a wonderfully vague phrase that can mean almost anyone. So who are these third parties? First, there are the service providers. Companies they hire for data analysis, cloud storage, and marketing. Standard stuff. But then it gets more interesting. They share data with reinsurance companies. These are the companies that insure the insurance companies. They need to analyze Root's overall risk to decide how to price their own products. So now your personal driving habits, aggregated with thousands of others, are being used to set financial policy at a level you'll never see. And then there's the really murky part. The policy often includes language about sharing data for business and commercial purposes, or with marketing partners. This is where that idea of anonymized data comes into play. The promise is that they strip your name and personal identifiers from the data before they sell it or share it. But in the age of big data, true anonymization is a myth. It's a comforting lie we tell ourselves. Let me explain. If a dataset shows a phone that starts every morning at 123 Main Street, travels to the same office building every weekday, goes to the same grocery store on Saturdays, and returns to 123 Main Street every night, you don't need a name to know who that is. Your patterns of movement are as unique as your fingerprint. Researchers have shown time and again that with just a few location points, they can de-anonymize a person with terrifying accuracy. So when a company says they're selling anonymized location data, what they're really selling is a detailed dossier of your life with your name temporarily smudged out. A smudge that other data brokers are very, very good at wiping away. This data is the new oil. It is incredibly valuable. It can be used by city planners to study traffic flows, by real estate developers to decide where to build a new shopping mall, or by marketing agencies to know exactly when you drive past a Starbucks so they can push a coupon to your phone. You've become a data point for sale. But the most chilling implication is one that's rarely discussed. Your data can be subpoenaed. In the event of an accident, a lawsuit, or a criminal investigation, law enforcement or lawyers can demand that data from Root. And Root would have to comply. Suddenly, that one time you were driving 10 miles over the speed limit isn't just a forgotten moment. It's a permanent, time-stamped data point in a server that can be used as evidence against you. The very tool you adopted to save money could become the star witness for the prosecution. You are, in effect, creating a black box for your own life. A detailed log of your movements that you have no control over, and that can be turned against you without your consent. This creates a permanent record. Even if you cancel your policy, the data they've already collected on you doesn't just disappear. It can be stored for years. You are building a data footprint that you can never erase. And we haven't even begun to imagine how this data will be used in the future. Right now it's for car insurance. What about tomorrow? What happens when this driving data is combined with your health records, or your credit score, or your social media posts? Imagine a future where you're denied a mortgage because your driving data suggests you're a risk taker, or you're passed over for a job because you frequently drive through high-crime neighborhoods, or your health insurance premiums go up because your late-night driving patterns suggest an unhealthy lifestyle. This isn't science fiction. This is the logical endpoint of the world we are building, one I agree click at a time. We are creating a society of total algorithmic judgment, where every aspect of our lives is scored, and that score determines our access to opportunities. And at the heart of it all is a black box. You don't know the exact formula Root uses. You don't know how much it penalizes you for one hard break versus a few minutes of driving late at night. You slam on your brakes to avoid a deer that jumped into the road. A human would call that good driving. The algorithm, devoid of context, might just see it as aggressive braking and dock your score. You're being judged by a machine that cannot understand nuance, a machine whose primary directive isn't to be fair to you, but to be profitable for the company. Beyond all the data and the algorithms, there's a fundamental human cost. The psychological weight of constant surveillance. Knowing you are always being watched, always being graded changes you. It introduces a low-grade anxiety into one of the last domains of personal freedom. Do you decide not to visit a sick relative late at night because you're worried about your nighttime driving score? Do you feel a pang of guilt every time you have to accelerate quickly to merge onto a busy highway? Driving stops being a simple act of getting from one place to another and becomes a performance. You are no longer just a driver. You are a performer for an invisible audience, an algorithm that holds your finances in its hands. The entire promise of Root was to free you from the tyranny of demographics, to judge you on your own merit. But what if it's just a new kind of tyranny? One that's more invasive, more total, and far less transparent. It replaces judgment based on your zip code with judgment based on a secret formula that tracks your every move. So we have this massive, unprecedented collection of personal data on one side, and the potential for a cheaper insurance bill on the other. How do you weigh that? When does the discount become big enough to justify the surveillance? And for whom is this trade-off actually a good deal? Let's break down that trade-off, because it's the absolute heart of the matter. This isn't just about saving a few bucks. It's a fundamental question about the value of your personal data in the 21st century. So, who is this actually for? Who is the ideal driver that wins this new game of insurance? First, and most obviously, it's for the exceptionally safe driver. And I don't just mean someone who hasn't had an accident in 5 years. I mean someone whose driving style is inherently smooth, patient, and predictable. The kind of person who leaves a 3-car gap in front of them, who approaches a yellow light as a sign to slow down, not speed up. Someone who never ever touches their phone while the car is in motion. If your driving looks like it belongs in a driver's ed video, you are Root's target demographic. The algorithm is built to reward you. Second, it's for the low-mileage driver. Think about the world we live in now. Millions of people work from home. They might drive to the grocery store, the gym, maybe a friend's house on the weekend. Their car sits in the driveway 95% of the time. Traditional insurance penalizes them. They pay a similar rate to a commuter who puts 20,000 miles a year on their car, simply because they live in the same zip code. For the remote worker, the retiree, or the city dweller who primarily uses public transit, Root can feel like a revelation. Finally, an insurance model that recognizes that a car sitting in a garage is zero risk. Third, and this is a fascinating one, it's for the driver with a thin file. Imagine you're a 22-year-old college graduate. You're responsible, you have a good job, but you have very little credit history. Or maybe you're a recent immigrant, a skilled professional who is new to the American financial system. Traditional insurance companies look at your file and see a ghost. They see risk. They see the unknown. So they jack up your rates, sometimes to astronomical levels. Root offers a potential escape hatch. It says, "We don't care as much about your credit score or how long you've been driving in this country. Show us you're a safe driver for 30 days, and we will judge you on that." For these individuals, Root isn't just a discount. It's a pathway to being judged on their actions, not their demographics. But for every ideal customer, there's someone on the other side of the coin. So, who is this definitively not for? First, the road warrior. If your job involves driving, sales, deliveries, contracting, or if you simply have a monster commute, Root is likely not your friend. The more miles you drive, the more statistical opportunities there are for an incident to occur. Even if you're the safest driver in the world, the sheer volume of your time on the road increases your risk profile in the eyes of the insurer. The model is built to favor cars that stay parked. Second, it's not for the situationally aggressive driver. This is a huge category of people. You might be a perfectly safe driver, but you live in a dense, chaotic city like New York, Chicago, or Los Angeles. Heartbreaking isn't a sign of aggression. It's a daily necessity when a taxi cuts you off or a pedestrian steps into the street. The algorithm, in its cold, objective view, might not distinguish between a reckless brake check and a necessary accident-avoiding maneuver. If your daily drive is a constant battle against unpredictable traffic, the app may flag you as a high-risk driver, even if you've never had a fender bender in your life. And third, it's absolutely not for the privacy-conscious. This is the non-negotiable deal-breaker. If the thought of a private company having a second-by-second log of your every movement, where you work, where you shop, where your kids go to school, how often you visit an ailing parent makes your skin crawl, then no discount is going to be worth it. For these individuals, the surveillance isn't a feature. It's a bug. It's a price far too high to pay for a potentially lower bill. This brings us to that second question. When does the discount become big enough? This is deeply personal. Is saving $40 a month or about $500 a year worth it? For some, that's a significant amount of money. It could be a utility bill, a week's worth of groceries, or a contribution to a savings account. For them, the data is just abstract ones and zeros, and the savings are tangible dollars in their pocket. They might say, "Google and Facebook already track me for free. At least Root is giving me a discount for it." But for others, that same $500 a year is a paltry sum for what they're giving up. Think of it this way. You are selling a detailed, continuous, and highly personal stream of data about your life. You're not just telling Root where you drive. You're telling them your patterns, your habits, your lifestyle. You're giving them the power to make judgments about you based on an algorithm you cannot see, question, or appeal. Is $1.37 a day a fair price for that? This entire model is a glimpse into the future, not just of insurance, but of how risk is calculated across our entire society. For a century, insurance has operated on proxies. It used broad categories: age, gender, marital status, zip code, credit score, to guess how likely you were to cost them money. It was a game of averages and stereotypes. A 21-year-old male in a sports car was a high-risk period. A 45-year-old married woman in a minivan was a low-risk period. It was often unfair, punishing responsible people who happened to fit a risky profile. Telematics, the technology behind Root, shatters that model. It replaces proxies with direct observation. It's a shift from, "Who are you?" to "What do you do?" On the surface, this feels infinitely more fair. It's the ultimate meritocracy. Your premium is based on your actions, not the demographic box you check. It promises to strip away the old biases and create a system where only one thing matters: how you drive. But in solving one form of bias, we have to be vigilant that we're not creating a new, more insidious one. An algorithm is only as good as the data it's trained on and the assumptions made by its creators. What if the algorithm learns that people who drive to a certain part of town late at night are higher risk? It doesn't know that's where the 24-hour factory is, where thousands of people work the night shift. It just sees a pattern and flags it. What if it learns that the jerky, stop-and-go driving patterns of a low-income, congested neighborhood are riskier than the smooth, open roads of an affluent suburb? The algorithm isn't being classist, it's just analyzing G-forces and acceleration. But the result is a de facto penalty for living in a certain area, the very thing the model was supposed to move away from. This is the tightrope we walk. Root Insurance and companies like it are not just insurance providers anymore. They are data companies. They are at the vanguard of a behavioral economy where our daily actions are monitored, quantified, and used to determine our access to services and the prices we pay for them. Starts with car insurance, but where does it end? Health insurance that monitors your grocery purchases and gym attendance? Home insurance that tracks when you're away from your house? So what's the final verdict on Root? It is a disruptive and potentially brilliant solution for a very specific slice of the population. If you are a safe, low-mileage driver who is comfortable with technology and isn't concerned about data privacy, you should absolutely take the test drive. You might save a substantial amount of money by proving that you are a better risk than traditional metrics suggest. You are the person this was built for, and for you it could be a game changer. However, if you value your privacy, if you drive a lot for work or pleasure, or if your daily commute involves the chaotic reality of urban traffic, you need to be cautious. The potential savings may not materialize, and you might find yourself frustrated by an opaque system that penalizes you for driving patterns that are perfectly safe and necessary for your environment. Ultimately, Root holds up a mirror to our modern dilemma. It pits the promise of a fairer, more personalized world against the reality of pervasive surveillance. It forces each of us to draw our own line in the sand. So the question isn't just whether Root can save you money on your car insurance. The bigger question is, what price are you willing to pay for that discount? And what does it mean when the cost of participation in society is the constant, quiet hum of being watched? That's a question each of us will have to answer for ourselves.